We are here once again, family, with a recap on the Euro USD trade we took last Thursday. This week was quite an amazing week for us in the community. We have countless of trades. We have about 6 trades that we took, and trust me, I think it was gold that did us dirty. The rest, the remaining 5 actually went into our area that we were anticipating, and we enjoyed quite an immense profit over there. So today, I want us to be looking at how we were able to get the Euro USD trade setup and trade core. So those who are part of the community would basically understand this markups that I have on. This was I think a higher time frame supply area that I was looking for price to basically tap into. Okay. Normally, how I do trade my reversals, I want to see reactions and intentions before I trade my reversals. Okay. I don't just jump on at the peak or jump on at the bottom, unless maybe I see that market have showed what they want to do before I follow suit. All right. So the last time that I had sessions with the community, I made them understand that I want price to clear this particular high, probably tap into 1.2600 and above. To God be the glory, we had this move to the upside that cleared even 1.2700. It cleared up to 1.276, 1.276. Yeah, it cleared up to that particular high. And then I was like, okay, if that is what price have done, then probably if we get a break of the low that made that particular high, we would be going in for sales. All right. So at that time, market was around this particular area. I'm just illustrating how this trade came about, and then I would end this with the trade we had on Thursday. Okay, so you're going to have quite a relatively lengthy video. All right, so we have a move to the upside that cleared the highs that I was basically waiting for price to clear, right? This was the low that was made prior to this particular high. And then guess what? I think on the 5 minutes, yes, on the 5 minutes, that was where I was waiting for that particular area to get broken to the downside, and then we take the trade on. So we had a break of structure. So in the 5 minutes, we have this, right? And we have this over here. And then we had this over here. So right after I saw them taking this particular area, yeah, I was like, okay, well, if they're able to come up to this area, fill in this imbalance, I'll be interested in taking the sell from this point, okay, from this wick, because it was this wick that filled in this imbalance over here. So I was like, well, if they get there, I would take my sell from that particular zone. But it was unfortunate the time that price got to this level, I was actually not with my devices, any of them, like not my phone, not my laptop, or like on the trading desk. I was actually in the washroom. Okay, it was quite unfortunate. I was in the washroom, and then I heard my alarm chimed. I was like, damn, this thing is doing what I was expecting. And guys, guess what? Exactly what I was expecting to happen. There was news effect that came in. Okay, there was news effect that came in, and then poof, they came up as high as this particular area. Okay, they came as high as this particular, but I had this zone mapped. I'm wondering, one may be asking, why did I map this zone? Well, it is some sort of discovery that I had based on my immersed backtest that I've actually done. I was like, if we get a buy to sell signal, right, a buy to sell candle, that's the body of that buy candle or that buy pressure is relatively small compared to the wick of the preceding candle. You map the body to the high of that particular wick. So this body to the wick, that is where it is actually mapped. So that is just a key takeaway for you to actually take home. All right. So guys, I missed this particular trade, and then that was on Tuesday. I didn't bother taking any trade again, because right after this break of structure to the downside, I was waiting for price to get in around this particular area. but that never happened, right? They then created these equal highs. They broke structure again. And I was like, well, price is breaking structures. I am more interested in the internal structure that price is basically printing. So I was like, well, let me cross-check if this one is actually relatively equal highs. I was like, nah, it is not relatively equal highs, but rather it is a shift, okay? A shifting, which in form of liquidity can also be some liquidity that price can take about. Like, nah, looking at the wick and then the break over here, I expect price to probably come inside this particular zone, and then I'll take a sell from there. Then on Thursday, let me fast forward this thing. On Thursday, price failed to basically get in there, right? But they cleared some highs over there. You see, they cleared this particular flat highs over here. All right. Oh, just, it's okay. They cleared this flat highs over here. I was like, wow. After this clearing, they dropped down aggressively to the downside, breaking this particular structure, breaking this particular area also. I was like, okay, now I've seen what I was basically looking out for. But then I wouldn't also be interested in engaging the market until I see this low being broken after they had taken this particular high off. So I was being cautious with EURUSD because this week EURUSD was just misbehaving. All right. But then price came back to the entry or to the point of interest. Still, I wasn't convinced enough. This point of interest is on the 30 minutes. Okay. So when you check the 15 to 30 minutes, you probably see it. I wasn't still not convinced, but I was still looking at, well, we are just contracting aggressively to the upside, like slowly to the upside. Price is not moving aggressively to the downside as it used to when price is going up. So I was like, well, when they get in again, I would this time around be looking for confirmation entry instead of me just jumping on the sells. So they tapped in. I was like, well, let's see. Internally, you know how I love my things. Internally, I saw that price took this particular high, right? But this was the low that was made prior to the take of that particular high off. I'm talking about this high was taken inside my point of interest, right? And then the low of that particular area got taken to the downside. Internally, there was a retest, of which this retest, I missed it, okay, because it was at dawn. Somewhere three thereabout, I was asleep. Okay, so I woke up around 4:30, and then I saw price doing all this. I was like, well, let's see if they're able to break this particular area to the downside. Also violating this zone, I would be interested in selling because this area will be seen as a flip zone. Okay, so you see price tap in. This is a demand area, right? They tap in, they went up a little bit, failed, and then dropped down. So I was like, damn, I've seen what I was waiting for. This break and then this buy to sell zone. Okay, so I was like, well, if you get this move to the upside, fill in this imbalance, and then I'll just be interested in taking my sales to the downside. And guess what? This time around, price came back. I called a short, and then everyone on the team, including those on Telegram, we all jump on this particular sell. And trust me, the sale was closed last Friday. Okay, it was closed last Friday. This sale also gave in around 10.2 R. Okay, I want you guys to understand, don't be that much concerned about the RR that I keep on mentioning. The monetary value is going to be on the actual risk that was taken on this particular trade individually, okay, multiply by that particular RR. So if you are the kind of trader that risk 1% and you held this trade, you would probably be gaining 10.2%. Okay, if I the trader that always going with 0.5%, you be gaining 5 point something percent. I, for instance, I told my team that because of the season that we are in, I'll be risking 0.5% on any trade that I take. Okay, and so on EURUSD, I was able to gain 5% off my account. All right, now for educational purpose, after the break of this particular low, whilst we got in the market and then there was a break of this particular low, I told them to shift their Excel to break even. Sorry, to entry. Okay, to entry. And then price retraced, giving us another entry over here. But I never took this particular entry also. Well, since I was in here, I never took this particular entry. And then price descended aggressively. One mentee called and was like, Mr. Ajuman, it seems price is reversed. And I was like, oh, chill. Price would just be giving this retracement, but it is not a reversal thing. Let's just keep on holding this particular asset. We will hit TP. And last Friday, indeed, we actually got our TP hit, and then we were out of the market. See, so I'm just playing price to see what actually happened. They tap into this area. Now, the area where I was taking profit on H1 or so was an imbalance. Okay, I think it was at that 30 minutes. It was an imbalance that I was actually looking at here. So it was this imbalance that I targeted on this particular trade. But the one that I missed, actually, this one that I missed, actually, I was just looking at swinging it into filling this huge daily imbalance over here. And then we'll be looking for buys within this daily demand area. All right. So guys, that is how come I was able to get this 1 to 5 actual growth percentage and then 1:10 RR trade on Euro USD. Okay, so trust me, if you want to go in for risk entries, just make sure that price reversing or retracing into your point of interest is not aggressive. Okay, the retracement is not aggressive. The retracement is aggressive. That is where I normally opt for confirmation entries. And for confirmation entries, make sure price reacts from your zone before you get in. Okay, and family, this is how we're able to capitalize on Euro USD this Thursday that we also close it on Friday. Thank you all. Enjoy your day. Make sure to subscribe and share the channel so that more educational content, when posted, you won't miss any of them. All right. So, family, do enjoy your weekend.